Hi, welcome back to the channel. Hope everybody's doing well out there. September is now done and dusted. It's been quite a volatile month. As we can see, the market was down about 5% or so from its high in the 2nd of September. We did have a little bounce on Friday due to some positive news coming out about Merck's antiviral COVID-19 pill. So we'll scan through the portfolio, have a little look and see what's been happening. If you enjoy the video, all that I ask is that you give it a little thumbs up, and please, if you've got any questions or queries, drop them in the comment section, and if you find value in this video, subscribe to the channel, would really appreciate it. Portfolio is down a couple of £1,000, which isn't too shabby in comparison to the market, but right now we're sitting at £91,133, and this is accumulated by a stock portfolio value of 85,000, and we've also got cash sitting on the sidelines about 5,700. Cash has come down a little bit. As we can see, I've been buying Lockheed Martin with some positive news about the stock in regards to share purchases as well as a dividend increase. I felt that this was an opportune time to add to the position, as it was quite a small position in the portfolio, maybe only 1 or 2%, and I wanted to double up on this a little bit. So we'll check that out in just a short moment. But on the dividend front, we've got quite a bit to talk through here. The month of September was bang on average. As you can see, if you look at the monthly average, it's about £180, and this came in at £184, so that's good to see. A nice strong month, good payments, and we've got a few talking points. We'll start from the bottom. Wells Fargo, the first payment received this month on the 1st of September came in at £13.39, and if we compare that to the year prior, 2020, it's up from £4.62, and there's two reasons for that. One, I did add a little bit to it within the last year, and the second reason is they did increase the dividend by 100%, so that was good to see. Really positive news, and that equates to why this has been up more than 100% year over year on the dividend payment side of things. Second payment, we've got Money Supermarket, UK price comparison company, coming in with a strong dividend payment of £23.13. This was only recently added to within the last 12 months. Pfizer as well. Pfizer I did previously hold. I didn't get a payment for this time last year as I'd sold out of it, but I liked the entry position that I got in this stock, and we came back in and now we're getting a strong dividend payment of £17.42. Raytheon, bang on the same as it was last year, which is quite good, £10.85, because sometimes these can fluctuate with the exchange rates in circulation, so exact same payment, delighted to see that. Microsoft, new position to the portfolio in the last 12 months, only coming in at £3.6, but that's fine. Only a small position. I would like to add to that, and they're a small dividend payer. They aren't just in the portfolio for the dividends. They of course have got overall capital appreciation performance that's expected in the future. Walgreens Boots Alliance up from £14.65 into £21.76, and this has been because I did nibble at some more shares in this. I picked up some additional shares within the last 12 months. The small payment we've got next, the 51 pence. This was from the Merck spin-off. This is Organon, which is when they recently split off into two companies early in the year. I've still held on to the shares that I've got, as they're down with a few percent, and they're only 3 shares, and by the dividend payment that's come through, it's not a huge position. If these went positive at any given point, I would probably just get rid of them and look to reinvest them somewhere else. Consolidated Edison, strong utility company, I like them. Good payment, £16.09. Didn't have these in the portfolio last year. And two very important talking points coming up. We've got Royal Dutch Shell, which this year comes in at £32.67, up from £16.20. 2020 was a horrendous year for oil, with BP and Royal Dutch Shell both cutting their dividends, and that's why I had £16.20 last year. But I thought there were some good buying opportunities, and I did add to some more shares in the last 12 months, alongside Royal Dutch Shell, who increased their dividend in the last quarter by 38%, which is why we've got a really, really good, strong, almost up, well, pretty much 100% year over year increase in the dividend payment. And BP, not being as generous, they raised their dividend by 4% due to the strength in the oil market recently, with high prices and some good volume coming through. And the last one we've got here is Lockheed Martin. We've just spoke about Lockheed earlier because I did add to the position only recently, so I won't get an increased dividend payment for this month, as I've only just purchased these shares. So looking forward out into December time, I'll be able to get a little bit more added to this. And Lockheed Martin, strong company, the share price has been coming down. Bought back about $5 billion worth of shares, which is positive to see, showing strength within the company. And they've also increased their dividend payment, so that'll be really good to see. One, we've got an enhanced position from this time, And secondly, we're going to get that 8% increase. So yeah, we'll keep our eyes peeled on December 2021 to see what dividends we're receiving from Lockheed Martin. Right now, we've got the overall dividend progress chart showing the first dividend payments received in September 2018. So this is really good to see, as this will actually be a 3-year anniversary and when I got my first ever dividend payment. So that's really cool to see where we started from at £40 and now we're up at £184.48 for this given month. The month of September is a real advocate of why we like dividend investing, with the continuous progress year over year from the £40 received in 2018, 100% increase to the next year at nearly £85, up to 120, and now we're up to £184. And this is a real positive chart of why we like dividend investing, or why I like it personally, because it shows that the process works, and over time these payments, they will grow as annual increases occur within the stocks that you've got, as well as adding to different positions over time. Total dividend income is £3,920, and from the first year of 2018, where we got a whopping £83 in the first year, we're now up at £1,600, and this is absolutely phenomenal to see. We've exceeded last year's total target of 2020, and with 3 months left or so of the year, we'll keep our eyes peeled to see how this is going to look going into the end of the year. Could be quite strong. It would be good if we can get over that 2,000 mark, but yeah, we'll keep our eyes on it and we'll see where we end up. But overall, looking through the different years, delighted that we're now at all-time highs with total dividend payments received. That's almost £4,000 of passive income, which I've got just by holding shares, and I can redeploy this back into the stocks that I've got or any new positions, and the snowball just keeps on growing and growing. Not a lot to say here. Lockheed Martin, some positive news out about how the company's seen their long-term future with the dividend increase as well as the share buybacks. I've seen this as a bullish sign along with the reduced share price, and we've picked up 4 additional shares coming in at about £1,000 worth of additional value. So yeah, happy with that, and we'll roll on December when we'll get this new increased dividend payment. We'll just finish off with a small talking point about one of the companies which I own within the portfolio, and this is Prism. They're currently in a bid situation. I really like to look at this company. A few months ago, I'd done a video on why I thought that the share price could double. There had been a bit of short-term headwinds around the fact that the revenue was slowing a little bit from where they expected, but with the share price greatly reduced from where it has been trading, I felt that this offered a good opportunity, and I picked up 240 shares. They're now up about 35%, so I guess the positive news, if we're looking at this strategically, is that this could end up being a 35% gain in only 2 or 3 months, which is good. But the long term out, I did believe in the company. I felt that they could offer good capital appreciation over time. But this is part and parcel of the game. US private equity firm called Vista Equity Partners, they've come in and offered £1.1 billion or $1.5 billion. And that's roughly where this share price is sitting at right now. So this is what I would end up getting should they sell at this price. Apparently Prism are going to be advising shareholders that they should accept the deal, as they've not really got a good bargaining tool going into this. As I said, the revenue has been slowing, so it's not as if they can say, look at us, our revenue has been exceeding targets, therefore we should get a premium valuation. That hasn't been the case, but we'll keep an eye on this one again, and I'll keep you guys in the loop what's happening with Prism, or you can follow that yourself. But again, not much else you can really do in these situations when a bid comes in. This has previously happened to another company that I've owned, William Hill, about 1 or 2 years ago. So all you can do is sit tight, and if they get bought out, you take the money, you take the capital appreciation, profits, put them back into the portfolio and take it from there. But yeah, that's pretty much summed up this month, guys. I hope you've enjoyed the video. If you're still watching at the end, please drop it a like, and I'll catch you in the next video. Cheers.